In the last segment, we talked about identifying the long-term dominant trend. And we also drew some short-term and long-term trend lines. And I indicated that those trend lines can act as potential support and resistance. But there are many indicators that can act as potential support and resistance. There are trend lines, there are Fibonacci retracements, there are pivots, moving averages. The number one is price. There's the VWAP, which is the volume weighted average price, and there's also Bollinger Bands. And different traders use different indicators. They also use different time durations in their indicators. For example, you'll see on this chart that I have a 50 EMA, 100 EMA, 8 EMA. Actually, let me go to another chart here. It's a little busy, but this chart has all the moving averages that I think are significant and are most common, along with the volume weighted average price and Bollinger Bands. 20, 50, and 200 are fairly significant and common. Now I have the EMA, which is exponential moving average, as well as the SMA, which is the simple moving average. And if you don't know the difference and you'd like to know, look it up on Investopedia and you'll find the answer there. I also have the volume weighted average price and the 100-day simple moving average, 50 simple moving average. The reason why I have them both is because there are traders that use nothing but the EMA. And then there are traders that use nothing but the simple moving average. So I want to know where there is a potential support or resistance area when it comes to moving averages. And that's both simple and exponential. Now, for this exercise, I'm going to focus basically on two charts. One of the S&P 500, and the other one we're going to use is Disney. Now, what is support and resistance? Essentially, all it is a visual of areas where we could see some congestion or some price support. And S&P 500 right now is a really good example. Let's go to the daily. We can see it more clearly there. But on the S&P 500, you can see that we have really clearly defined support in the 1812 area. Now look, this isn't precise. You can have a band of support. It doesn't have to be precise to, to the penny. It can be a band of support. So, for example, you can see where it came down into this area here, and it only hit 1822, but bounced off there. Close enough for hand grenades, right? So, or horseshoes. So we've got a band of support. So essentially what's happening is the price is dropping, demand is being created, and buyers are lining up for the potential to anticipate a bounce. Now, if we're talking about resistance, just flip this chart upside down and imagine that the stock is trying to break through to the upside through 1812. And each time it comes up into this band of resistance, it fails. So what's happening there is you have sellers lining up as they approach an area of resistance. and they start dumping supply into the market. Essentially, this is all about supply and demand. That's what the market is built on. So if we overdo it to the upside, you have people that start locking in profits and dumping supply into the market. As if we overshoot to the downside or approach an area of support, you have buyers that start lining up to soak up that supply. Now, oftentimes you will hear areas of support and resistance referred to as the ceiling and the floor. And it's a really good way to visualize it. Let's go ahead and back out on the weekly. So we know that we have a band of support in the S&P 500 that's currently being tested. Now, it's important to note that the more times a price holds as support or resistance, the more significant that price becomes. And the reason for that is this: each time it holds as support, or each time that it acts as resistance, more and more traders become aware that that price has significance. So when the price breaks through either that resistance or support, it can be a fairly significant event. The preceding move coming into the resistance or support can determine how significant the price level becomes. Because if it's just a slow grind, not as many people will take notice as if you have a severe move and all of a sudden it hits a wall. If it just grinds down through it, it's not as significant. The other thing that you want to pay attention to as you're coming up into support or resistance is the amount of volume that is taking place during the move. If there's a significant amount of volume being traded at that level, the more significant that level is. So a lot of times what can happen, and you see this, is that you will find 2 points, one of resistance and one of support, that a stock or index or ETF will bounce in between, and it creates a range until eventually there is enough force of either buyers or sellers to take out the resistance or the support. You can have basically the stock is trading within a channel, and it doesn't always have to be a sideways channel. It can be in a channel on an incline. It can be a channel that's on a decline, and the price will bounce in between the two areas of resistance and support. The most powerful is price. So let's draw some technical lines, some trend lines on the S&P 500. And we talked about how we ramp and accelerate. For areas of support and resistance. And if we look at these trend lines, we can see that this one has acted as support basically since 2012. Each time it's come down and tested, it's bounced off of that line until eventually it broke through with enough force that the sellers could take out that trend line. Then we get some buyers as we approach an area of potential support in price, and we get a movement back up to the trend line, which then acts as resistance. So it's important to note that once you break a well-defined support or resistance line, if you break through resistance, it then becomes support. That line becomes support. If you break through support, that line then becomes resistance. Why is this so important? Why is it so important to identify areas of support and resistance? Well, it's going to help you identify your risk and your reward. It's going to help you anticipate where you may want to go long. If you're looking at a chart where a stock is coming up to a very well, clearly defined area of support, it may be an area that you want to get involved for a long position. If you're in a stock and you're looking at where you want to take profits, knowing where the resistance is going to help you start to scale out and book your profits. If you are contemplating going long in a stock and you're coming up into a significant area of resistance, then you may recognize that your risk reward is not very favorable. You may want to look to wait until there's a pullback. It could help you decide whether you want to take a day trade, swing trade, or long-term investment. If you're in long-term investments and you recognize that the markets are coming up into a significant area of resistance, you may look to lock in some gains, raise some cash so that you have it available when stocks stocks get cheaper because they couldn't break through resistance and you get a market pullback. When you have multiple indicators that all align at the same point, that makes that area of support or resistance even more significant. For example, the S&P 500 testing this 1812 area also happens to be testing the 200-day moving average on the weekly chart. So you have double support there, which means that if this area breaks, and that's the EMA, if this area breaks, it could be a significant break. Bollinger Bands are these light yellow lines. And what it represents is an envelope that the price trades within. As it pierces an upper Bollinger Band, you'll oftentimes see supply get dumped onto the market. Because essentially what it's saying is it's gotten out of the envelope, it's moved too far, too fast, and then you start to see some supply come into the market. When you see it pierce below the lower Bollinger Band and also into price support, so we had a couple of things going on here, pierce below the Bollinger Band, you saw buyers start to come in and accumulate and soak up that supply. So the number of touches of a specific price, the more it becomes common, the more and more traders recognize it, and it becomes more and more significant. But think of the game Pong. And if you're too young to remember what Pong is, look it up on the internet. But it was an Atari game where you're basically bouncing a little ball into a wall. The more times you hit that wall, it would weaken, and eventually you punch through. The same thing happens with price. The more times you touch an area of resistance or support, it weakens. Eventually, you get enough force to break through, and that can be an extremely significant move. Now, you need to understand that support and resistance works on all time frames. It's not just the weekly or the daily. There's support and resistance on the hourly, the 15-minute, the 30-minute, the 5-minute, the 1-minute. Depending on what type of trader you are, you want to be able to clearly identify what those areas may be. Now, I've been doing this long enough that I can recognize where there are areas of significant price support. So this 1570, 1580, somewhere in there. 1570 looks like a fairly good area of price resistance, which has now turned into support. Had a double top here, pulled back, came back up, consolidated here for some time before it took it out, and then pulled back and acted as support. Where else could there be some support? If it breaks below this 1812, where can we expect to potentially see some support? Somewhere around this 1720 area, but this is a minor area of support, unlike this area, which is a major area of support. But let's not just take my word for it. Let's take a look at some Fibonacci retracements. Fibonacci's are fairly simple to do. You just draw your line from the lowest point to the highest point, and like I said, you can do this in any time frame. No, for some reason it's not working with me here. Let me go to the monthly. And go back to the weekly. Sorry about this, but this is what happens when we're doing things on the fly. So as you can see, we are really, really close with the lines that we've drawn on price for potential support. So if we really line them up with this Fibonacci, get that out of the way. Basically, it's at 1800. It's a 23.6 retracement. Then there's a 38.2 retracement, which is at the 1568 level. And then if we come down here a little bit further, the next major area of support, price and Fibonacci retracement, is around 1400. So let's take a look at how we can apply support and resistance on different time frames for a particular stock. And let's go ahead and take a look at Disney. Now, I have already drawn my well, I thought I had them drawn, but apparently I didn't. So let's go ahead and draw our trend lines on the weekly. I'm going to go to a cleaner chart just to draw the trend lines, and then we'll come back to the chart with all of the moving averages. Remember we talked about how things can ramp and accelerate. If we go a little bit further back on the weekly, we have a very gradual incline, and we ramped away from that. And now we can see that we've broken this trend line here. Once it broke through, it acted as resistance and then pulled back. And now we've broken through this second trend line where it will likely act as resistance on the way back up. So looking at Disney, we talked about the fact that there are thick stocks and thin stocks and how it takes an awful lot of volume to move a thick stock significantly in price. But that doesn't mean that you can't take a thick stock for a day trade. There's typically a tremendous amount of liquidity in thick stocks. So if I'm looking at Disney and I know that I have some price support at $90, and why do I say that? Well, here's where we consolidated. It acted as resistance, basically about $90.50 or so. Acted as resistance. And then once it broke through, it acted as support. So we know that we have some support in the $90 range. This is on the weekly. Now let's take a look at the daily. See if we can get even a better picture. So I'm going to adjust this a little bit and say that our support really is right around $90. Okay, we've got some consolidation here, congestion. We look at where the price has pulled back to on multiple occasions, $90. Round numbers act as support and resistance quite often. It happens to be one of my favorite types of day trades, which is called with the round number roll. You know, round numbers hold some psychological strength with people for some reason. So we've seen that $90 has acted as support. What's concerning about this particular chart from a weekly or a long-term time frame is we have potentially a double top in the stock. We know that we have broken below a longer-term trend line. Okay? So taking this for a swing or a long-term hold would be a bit riskier here because we just broke this price support. And the likelihood that it could pull back if it can't find enough force to get through this trend line or through these moving averages, then we may see it pull back even further and head down to its next area of support, which, let's just take a look at where that may be. Well, we have a 200-day simple moving average right here at around $80. We just talked about the fact that 80 can act as, or round numbers can act as support and resistance. So we're close. We've got about $80 here. That could be your next area of support on the long-term chart. That's concerning if you're thinking about taking it for a long-term investment. If it breaks below 80, where is our next area of significant support? I would suggest that it's somewhere right around here in this 67 area. We see how it consolidated here, took a while to try and break through. Once it broke through, it acted as support. But let's not just take my word for it. Let's take a look at the Fibonacci's. And see what we've got for retracements. So we have the price support at 90, but there was a 23.6% retracement at 95. The next Fibonacci retracement just happens to line up exactly with the 200-day and the 80 price point where we saw some consolidation. The 50% retracement just happens to line up where we saw this congestion at 67.27. So, thinking about this stock in terms of a long-term investment is not very appealing to me right now because we've broken this area at $90. The next clear area of support is $80. That's a $10 move. So I'm looking at potentially taking it for a long at 80. But does this mean that there is no trade available in this stock? Well, I don't know. I think there might be on different time frames. So let's take a look. Let's go to a 5-minute time frame. And what we know is that we have support from the daily at 90 bucks. That is a pretty significant area of support. We broke below it, and now it has become resistance. So, if I'm looking at this on a 5-minute time frame, and I watch it reclaim the $90 area and close above there on this day, I may be looking for this, and it looks like it had a little bit of a parabolic move right at the end of the day, which kind of sets it up for what's called a red to green move. And we'll go more into this later on in the program, but it's another one of my favorite setups. Red to green move. So you had a nice parabolic little push right into the close. The following day, we opened up and we dropped. We broke below the VWAP. We broke below the 50 and the 100-day. But you know, let me show you the chart that I use for 5 minutes. I don't use TC2000 for my charting software during trading hours. I use Scottrade Elite. I have 2 programs. I have Interactive Brokers and Scottrade that I use for my trading. But let's take a look at what happened with Disney. These gray areas are pre and post market. The white area is regular trading hours. The yellow line is the volume weighted average price. And these colored lines are pivot points. So let's walk through this day. The stock opens up red, and actually it didn't have a parabolic spike at the end of the day. It had a nice move pre-market. But there's not a lot of volume in pre-market. But it did have a nice little move pre-market. Essentially what it did is it pulled back to the previous day's, almost pulled back to the previous day's VWAP and pulled back to this pivot. Didn't quite get there, but then it had a nice reversal back up into the VWAP and consolidated. Now the significance of where this VWAP is at $90 or close to $90. So if you wanted to get involved in this trade, knowing that on the daily chart you've got $90 as a pretty good area of support. Now let's go back to the 5-minute on this TC2000, and let's try to determine what could we mark as our target. Essentially, we're looking for an area that acted as support and has acted as resistance. And we can do this off of the previous day, and going back a couple of days here, we can see that $91 acted as support. It acted as resistance the day before. It was in pre-market that we made a little bit higher move. Let's bring back the 5-minute chart. So we know that we have some significant support on a daily time frame, which is a longer time frame and more significant. And what we want to try to do is we want to align these things on multiple time frames. We're going to go into that. We're going to go into that in much more detail later on in the educational program, aligning things on multiple time frames. But just taking a look at this 5-minute chart, knowing that I have resistance or support at $90, as this price comes up and reclaims $90 and holds, you could look to go long. Now you could wait until it reclaims the VWAP. You could try and anticipate it taking out the VWAP. But if $90 is your target to entry, you could then place your stop at the low of the day, which was $89.60. You're essentially risking, what, 40 cents? And actually 40 cents. And your target is 91, which was not quite the pre-market high, but it's a nice round number, right? And there is a strong likelihood that the stock could have a dollar move. It's made these kind of moves before. So, let's look back to the previous day and how the pivots can play a role. So pre-market, it pulls back, tests the pivot point. We open up. It takes out the VWAP, consolidates, and starts the stair step. It comes up to this pivot point and consolidates. It never comes back and even touches the VWAP. A lot of times you'll see traders paying very close attention to the VWAP for a pull. If the VWAP fails, they may look to go short. If pivots fail, they may look to go short. This stock consolidated here, and that price was basically $87, up to this pivot of $88.45. It continued to climb throughout the remainder of the day, all the way up to this pivot of $90. So it can make significant moves. This actually would have been a better day to day trade it than this day. But even here, you had a nice $1 move in the stock. And that is the significance of being able to identify support and resistance. You can put together a strong risk-reward game plan that is essential if you're going to be successful as a trader. I hope that this covered and explained to you all the different types of support and resistance, and really the fact that it just is supply and demand. I encourage you to look further into different types of support and resistance, whether it's trend lines, pivots, Fibonacci retracements, price, VWAP. I encourage you to look up all of those things on Investopedia and educate yourself so that you can learn how to identify these things visually on a technical chart. In the next segment, we're going to go over designing a plan and determining your risk and reward.